Thank you for the very warm intro. I'm very happy to be here. It's a really exciting event. So I'm Jenna and I work for Melonport, and I'm here to bring a more high-level perspective on the interesting and fascinating discussions that we've heard in the past 2 days around blockchain governance mostly. So what I'm going to be speaking about today is governance from a protocol viewpoint, so from a protocol that is being built on Ethereum, and how can we render a protocol self-sustainable in the future. So in our Melon ecosystem, we have three main stakeholders. We have obviously the token holders, we have the users, and we have the developers/maintainers. So we have to make, you have to build a system that caters to the need of all of those stakeholders. But we also have to take into consideration that there is a fourth stakeholder, which is common to all of us, and that is the crypto community as a whole. Because we need to be aware that all of the governance experiments that we're conducting reflect on the reputation of the crypto space as a whole. And I think that's something really important to keep in mind when experimenting with this type of things. So I'm going to be presenting our approach. But before that, I'm just going to give, a brief overview of Melon for the people who are not familiar with it. So Melon was born from a simple rationale, is that the asset management industry has a lot of problems today. It is very slow, very inefficient, very expensive, time-consuming, and it has very high barriers to entry. So that's where Melon comes in. So Melon is a decentralized infrastructure for on-chain asset management. So we're trying to build a open source, decentralized, permissionless, and secure tool for people to run, to create and manage investment funds on the Ethereum blockchain. So the Melon protocol is an open source protocol for on-chain asset management. What this means is that it is a set of smart contracts in which we code the rules by which an investment fund should work. So this is just a small review of our system, but basically this protocol allows a new type of investment funds, which we call technology regulated and operated funds. So what that means is that anyone can create a fund on the blockchain and set all of the parameters. So for instance, you can choose your asset universe. You can choose which exchanges you want to trade on, 0x, Ethfinex, OasisX, whatever. You can also define your risk management profile. So things such as max number of positions, max volatility, blacklisted assets, etc. So you define all of your parameters and you deploy your funds to the Ethereum blockchain. And then it is really simple. It's like in a couple of seconds, it costs just a little bit of gas. And you have a decentralized hedge fund on the Ethereum blockchain, and people can come in and invest without having to trust you and without having to give you the custody of their funds. So it's, I believe, coming from the asset management industry previously, I believe this is absolutely, fascinating, and I think it's actually very disruptive for this industry. So that's for the brief overview of Melon. If you are more interested or if you want to try it yourself, you can go on melon.fund. It's on the testnet. We deployed to the mainnet a couple of times. The product is fully functional. So I encourage any of you who is interested to go there and create your fund. So now we have this functional product, and Melonport, the private company behind the Melon protocol, has been mandated in February 2017 for a 2 years workshop to build the Melon protocol. And there is this promise that we will deliver the first version of Melon in February 2019, so upcoming February. So we have to think carefully here, because people are going to be running businesses on top of this protocol. They're going to be running investment funds managing other people's assets. There is a lot of value at stake, and we need to make sure that this protocol can continue living and iterating by itself without the presence of Melonport. So in February, Melonport, the company, will be dissolved, and we are right now building a system by which the protocol will be, the maintenance of the protocol will be decentralized. So we have, there are 3 aspects to keep in mind here. I'm going to present each of them. So the first one is in order to remove the central role of Melonport in this protocol, we need to open up the protocol to other teams and other projects who want to build on this platform. So that's providing a favorable environment for network effects. So that's going to be Melonimics 1. The second thing is we need to find ways to provide proper incentives, especially incentives to the governance and to the people who are going to be maintaining the protocol. And the last thing is the way by which we make decisions and maintenance in general. So that's the part that we have been discussing a lot in this conference for the past 2 days. So we'll be touching lightly on that at the end. So that, first of all, we're going to speak about Melonimics 1. So we are building an infrastructure. So Melon is really an infrastructure level type of software. But asset management has a lot of use cases. So you have people, running pension funds. You have other people running VCs, private equity, etc. So there are a lot of use cases. And when we design this protocol, we can't really cater to the needs of each of those use cases. So we do something that is quite modular, so that people can build it in a way that is catering to their specific needs. So having that in mind, we want to make it easy for all of those projects and use cases to build on top of Melon. And we do this by 3 ways. So the first one is by allowing projects to make funding requests to the Melon inflation pool. So we can have different projects in the asset management space requesting for a funding for a specific use case. And the Melon token has an inflation curve, so there are a certain number of Melon tokens issued each year, and we can use that to incentivize this project to build on our platform. Instead of, for example, running another ICO on top of already having Melon and Ethereum. The second thing is we also have projects in the asset management space who already have a token, and for those cases, we propose the possibility to do token swap and mergers. So what that means is if you have project A who has a token A, and they're interested in actually creating synergies with Melon, they can make a proposal to swap their token for Melon token. So what that will do is that it will dilute the Melon, the current Melon holders, but in exchange it will create, hopefully it will create value by increasing the network effect. And the value created by this network effect is higher, should be higher than the value lost in the dilution. And the third thing is allowing developers, external developers, to apply for funding for having a specific integration with a specific exchange or a specific feature addition, etc. through the MAP process. So it's like Melon improvement proposals, so very similar to the EIPs that we have in Ethereum. So to make that a little bit clearer, so as you see, we have on top the Melon infrastructure for asset management. And a lot of projects are currently planning to build on top of that common infrastructure. But the problem is each project has their team, technology, that's totally normal, but each project has its own different token and its own different governance model and maintenance requirements. And what we think is that this is not very efficient and that we're missing some very interesting synergies. So what we propose instead is that those projects, in addition to sharing a common infrastructure, can also share a common asset management token and a common governance and maintenance framework. So we think this can bring a lot of value in the blockchain asset management space. That's one thing. And the second thing also is from a user perspective. I think it's it improves the user experience by a lot, because if you don't have this, let's say that you want to use MyDAS, which is an application that is building social trading on top of Melon. If you want to use it today, you would need to have Ether to pay for gas. You would need to have Melon to pay for the Melon network, and you would need to have, if you trade on a 0x relayer, you would need to have 0x tokens to pay for the 0x fees, and you would also need to have MyDAS tokens to pay for their fees. So that starts to be a lot of tokens. And with this proposal, we can take it down to 2 already. So it's already 1 that we don't want, but it's already better. So that's for Melon Mix 1, what we can also call token M&A. So the proposal is a unification token for the asset management project on the blockchain, reduces friction and cost on the user, and it also allows to align the interest and incentives of different teams, developers, projects by sharing the burden of governance and maintenance. So we believe this is a favorable framework for network effect, but it is not sufficient. So we go now to the second part, which is providing the proper incentives to this ecosystem. So that's Melon Mix 2. So when we design the token mechanics of the Melon token, we try to keep 3 things in mind. So first of all, we wanted to ensure that the Melon token had integrity and desirability, so that it could provide adequate incentives for the people building on that platform. And the third thing is that we wanted to avoid the pitfalls of the high velocity token models, such as the payment token model. So we spent a lot of time thinking on that. I'm not going to go into the details of the high velocity type of things. Mona and I wrote an extensive piece on that for the people who are more interested in the subject, and it's called Melon Mix 2. So, Melon Mix 2 introduces the Melon engine, which is a buy and burn model. So typically when you're on Ethereum interacting with smart contracts, you're used to paying gas in Ether at the Ethereum gas price. And we introduced the idea that when you're going to be interacting with any of the Melon smart contracts, obviously you're going to have to pay the Ether gas, and you're also going to have to pay what we call the asset management gas to the Melon gas price. This asset management gas is sent to a smart contract that we call the Melon engine, and this Melon engine does 2 things. The first thing is that it places bids for Melon tokens on the market. So the Melon engine receives Ether. So you would expect to pay the fee in Melon, but you're going to pay the fee in Ether, and the Melon engine is going to sell this Ether to buy Melon tokens on the market. So it's kind of like a market maker contract. And once it has bought the Melon tokens, it's going to burn them, so sending them to a probably inaccessible Ethereum address. So this has a couple of side effects. First of all is that as the network is used, the total supply of Melon token is going to reduce absent inflation. In real condition, there will be inflation, but for simplicity here, the total supply should decrease when the network is used. And the second thing is that with this mechanism, we managed to align the token value with the usage of the network, which is quite convenient if you want to provide proper incentives for the people working on that platform. And the last thing is that we also reduce friction and improve the user experience, because in Melon Mix 1, I told you we now need 2 tokens, Ether and Melon, and with Melon Mix 2, actually, we only need 1 token. So you will only need to have Ether to interact with the Melon protocol, and we abstract away the Melon fee, we abstract that away from the user. So the last part is how we make decisions on the future of the protocol. So as you know, software is never finished, it has to evolve, there will be probably, bugs, new features, etc. And we need ways to make those decisions and to make upgrades to the smart contracts. So the approach we're taking here is a user-centric and skill-based governance model. So what that means is we want to make sure that all of the decisions are in the interest of the users being the fund managers, but also the people who invest in the funds. So we envision two bodies to this. The first one being the Melon Technical Council, which is an idea we've introduced a couple of months ago. So the Melon Technical Council should be a set of people or entities whose identities are known, so they're staked with their reputation, and they should have technical expertise on the Melon protocol and the other protocols that our protocol interacts with. The people in this technical council should also have an absence of conflict of interest to the Melon protocol. So we add to that another body or another representation, which we call exposed businesses, and that means that really means just users who have provable business exposure to the Melon protocol. This would be a self-organized body. And the idea is that there would be a very dynamic communication channel between the exposed businesses and the Melon Technical Council to address the issues and needs of the users of the network. So we try to highlight the guiding principles that the Technical Council should keep in mind when making decisions. The first one being maximizing user adoption. The second one being protecting the users by preserving the integrity and the security of the network. And the third one being fostering innovation by allowing projects to come on this platform, be funded, etc. So there are three categories of things that the Melon Technical Council is going to be taking decisions on. The first one being the protocol upgrades. So to be very clear here, our approach is user-centric. So we make it in a way that the user is never forced into an upgrade. It's always opt-in. And the only power of the Melon Technical Council will be to update the ENS subdomain names of the Melon contracts. So if you're a fund manager, it will have to be a voluntary action to upgrade to new contracts. It will not be forced on you. The second thing is resource allocation. So as I've mentioned, the Melon token has an inflation curve, and the Melon Technical Council is going to be the one allocating this pool of newly minted tokens every year. It's going to be allocated to developers contributing to the protocol. It's also going to be used for funding the projects that I've mentioned in Melon Mix 1. And they're going to have to make decisions on, is this project going to add value to our network, yes or no? Yes, we fund. No, it's not worth it. And the third thing is the network parameters. So when I talked about Melon Mix 2, I told you the Melon gas price. I told you the users are going to be paying the asset management gas at the Melon gas price. But I didn't mention what's this price, how is it set, etc. So the idea is that that will be a responsibility of this council as well. Initially, it will be set in a reasonable manner, but this will require a lot of adjustment based on market prices developments and levels of usage of the network. So it should always be set in a way that does not incur a too high cost on the user, but also in a way that it properly incentivizes the developers working here. So with those three aspects, we do three things. The first thing is that we decentralize the development of the protocol. So our goal is really to remove Melonport, our company, from being the central maintainer and developer and responsible entity for the Melon protocol. So we really want to step down and allow other teams to kind of take over that process. The second thing is that we provide incentives by aligning the token value with the usage of the network. And the third thing is that we provide a way to keep the network secured and to have an ongoing maintenance through the Melon Technical Council. So this is the inner functioning of the Melon Technical Council haven't been publicly communicated yet. We're going to be communicating on that in the coming weeks. So if you're more interested in that, I encourage everyone to stay tuned. And we'll be also opening the discussion for community feedback and discussions around our approach. Yeah, so and I'm happy to take questions now or later today if anyone has anything. Thank you.
Yes.
Thanks.
Hey, thanks for that. I just wanted to ask about the inflationary model of the token. You said there'll be issues. Are they capped or are they uncapped? And also, as the network evolves and you have more assets on it, what happens? Is there a conceivable situation where the assets are worth, for example, 10 times more than the value of the token? Let's say there's $10 million worth of assets and $1 million is what your token's cost. But if I come in and buy all your tokens for $1 million, what happens to the rest of the assets?
Yeah, great questions. So the first question on the inflation curve hasn't been published either yet, but it is going to be based on a curve. Your inflation rate probably disinflationary, something that looks like that. Yeah, but it hasn't been published yet, so I can't really communicate on that. And the second thing is, what if you buy all of the tokens? That's a really good question, and that's actually the question that we've been working around for a couple of months now. I haven't said how the Melon Technical Council is going to be set yet, and it is not. It is going to be in a way that prevents this type of actions.
Okay, but the value of the assets are directly linked to your tokens. So your tokens actually securing the assets on there first.
The value of the assets held in Melon funds are not linked to they have nothing to do with the Melon token, actually. Yeah.
I'm just curious how. Does this work?
It's not working.
Okay, cool.
Thank you.
I just hold it.
Yeah. How does the merger and acquisition thing work in more detail when you are trading tokens from one project to another? Can you just expand on that, especially on the technical side? Is this a smart contract thing? Are tokens deposited in actual contract or?
So the coordination around that is going to definitely require human input and human decisions by the technical council. And if a swap request is made and sounds sensible for the Melon ecosystem, the incoming project should burn all of their tokens to get the equivalent amount in Melon tokens. So it's really going to be just an exchange of token X with Melon tokens. But that is going to happen at the technical council level.
Wait, so they're burning their token, they're not giving it to you guys?
No, they're burning them, yeah.
Why do you think someone would want to do that?
To take part into this common infrastructure and not to have to build from scratch something that we've already been working on for 2 years, and to benefit from a greater network effect.
Do you think there's a risk of bad projects swapping their token to Melon and then riding away with other good projects if they no longer have a unique incentive themselves?
Yeah, there's definitely this risk, and that's why there will be thorough reviews on each project on a case-by-case basis. And the goal is definitely not to fund just any asset management project. It's really to fund projects that are high quality and adding something to the ecosystem. Yeah.
Do you vet the projects as a personally centralised in the team, or who vets each project to say that it's good or not?
The Melon Technical Council. So just to be clear, that's not us. It's going to be a council that is going to be appointed.
Who is the council? Made up of token holders, made up of...
It will be made up mostly of technically skilled people, and it will also have a user representation. And since it's not really public yet, you know, I'm happy to also discuss this with more details offline and answer more questions.
Or maybe a way to decentralize that, so you don't have to have reputational actors, potentially. I don't know, we can talk about it maybe.
Sure. Yeah, Mona and I are here for a couple more hours, so we'll be happy to discuss. And to get feedback, because it's very valuable to us.
I mean, it opens up the huge complexity here. Basically, that like you run into like a lot of complexity there, and a lot of dependencies.
Which parts?
Like especially with tokens you onboard, and how you do due diligence with them and the value they add. It's like with the European Union, when you add additional member states, you don't know if they really provide the value which is necessary to keep up the level of the economic strength in the Union. So that is something which is dangerous, especially if you add projects which do not add value. They will pretty much draw value from other projects down, right? So the will average out in the end.
Yeah, I mean, there will be very explicit criteria, and again, it will not be easy to just swap your token with Melon. It will take a lot of effort, I would say.
I would also add there's no obligation for the non-technical council to accept the swap. They would have to be encouraging because of the nature of the curve.
Yes.
The windows only open really in the beginning because the idea is that it drops quite significantly in later years. It's just the first few years require the most maintenance and development around because there are so many use cases in asset management.
Yeah.
So you want them to swap out?
Yeah, ideally, but there's no obligation. There's no obligation on either party to refer. It really has to be that we believe, or the technical council believes that the value created by including a new project will be outweigh the dilution of the tokens. Otherwise, there's no point to it. So it requires some evaluation, but it's nothing that hasn't been done before.
Yeah.
Ultimately, it relies on this technical team.
Yeah.
Ultimately, they will have all the decisions. They are like the managers of this fund, so am I correct?
Yeah, that's correct, and that's why we call it kind of like skill-based, because it can't be just anyone who is willing to take part into those decisions. It should be people who are able to make informed decisions, not only at the protocol level, but also at the economic level of letting projects in or not.
How is this different from an investment fund managed by 10 people?
That's a good one. That's a good question. I wouldn't call it an investment fund because ultimately this technical council has a goal, which is the success of the Melon network or protocol, and letting in projects that adds value is indirectly an investment in the platform. Yeah. I would say so.
Fund, they want to.
Yeah, but the assessment is not so much a financial assessment, it's more of a technical assessment. Are these guys able to provide a technical skill set or a technical skill set that's valuable to the ecosystem or not? And also investment funds, they look at ROIs and different metrics. Here, where it
would be really hard to do that in that case.
It makes sense. I mean, it shifts the focus to the resolution, and I think there's value in that. And it's a superior move, especially in the blockchain space, as we see a lot of VCs will not be successful with their investments as the projects are not delivering at all, right?
Yeah, I would argue like a technically skilled council probably could make better.
Yeah, absolutely. I fully agree.
There is a question.
Very stupid question. If you do not charge any fees, how do you earn money?
There's no stupid question, and so there is a fee that I mentioned in the second part, Melon Mix 2. So when you interact with the Melon contract, you pay the Ethereum gas as a fee, but you also pay the asset management gas. It is abstracted away in the sense that you don't have to pay it in Melon tokens. You can use Ether to pay it, but there is a fee. And just to be clear, this fee doesn't come to us or to Melonport. This fee ultimately burns Melon tokens. So it's the value is distributed over all of the token holders.
Yeah. The returns of the investment funds,
yeah.
Are they sort of performance measured in Melon? Is that the base currency for all the investment funds? Or is it just a gateway to get into the...
That's an excellent question also. This is totally open-ended, so when you create your fund, you can decide what's the denomination asset of your fund. So it could be, so we have experimented, sorry, with Melon. We recently experimented with Ether as a denomination asset, and you can denominate your fund in DAI or USDT or whatever you want. So it's really up to the manager to decide what's their benchmark.
Then, if there is a premium, it will be carved out by the market. Like it was the efficient market hypothesis would solve that. If there would be a premium or a discount on the Melon versus the base currency, there would be a clear arc, so it would be closed anyway. The market forces would take care of any premium that develops.
I think it's the Melon exchange rate that matters, because if the protocol is on Ethereum, so that the fees are always, the gas is always paid in ETH. It's just easier for the user, because they're paying the gas anyway.
Okay.
So it's the Melon exchange rate that matters, not the denomination currency.
Okay, so the only one who can close an R are the actual fund manager of that.
Yeah, but there are going to be ARB opportunities probably, but more on the Melon rate rather than the denomination.
That anyone can